It's like everyone's always trying to get a little smarter about the world, right? I mean, like, who isn't? But actually finding the time to sift through it all. Find those bits of wisdom that apply to everything, not just your finances, I mean. That could be a real challenge.
Oh, yeah. Definitely feels like trying to find a needle in, well, a very, very large haystack.
Exactly. But hey, that's where we come in, right? Today, we're your shortcut. We're going deep on a true legend, Warren Buffett.
Yeah, we've got a ton of his thoughts here, like his most famous quotes, analyses of his career. It's amazing, right? And like why people are still so drawn to him and his philosophy. And the thing is, so much of it goes way beyond just Wall Street.
For sure.
Yeah.
And that's the whole point for us today.
Yeah.
We're not just going to like rehash famous quotes. We're digging into the core principles that make these statements tick,
Yeah.
Like why the Oracle of Omaha still resonates, even if you've never even thought about buying a stock.
Yeah, his investment track record is insane, but his wisdom is really like a guide for business and life. So where do we even start with all this? Well, the best place to start is with something that's at the heart of it all, how he sees the difference between price and value.
Okay, yeah, let's unpack that a little. We got a couple of Buffett classics here. Price is what you pay, value is what you get, and it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
Right.
Now, I mean, those sound simple enough, right?
Yeah.
But there's a lot more going on there.
Oh, yeah, absolutely.
Right.
He's basically saying the cost, like the money you hand over is different from the real worth of the thing you're getting. That true value is in like its quality, its potential, what it's really made of.
So, like, you could find some painting at a flea market for practically nothing, a great price.
Right.
But what if it's just some mass-produced print, no real artistic value?
Right. Its real value to you is like nothing.
Yeah, you might enjoy it for a bit, but that's it. But maybe spending a bit more on a piece by a respected artist, even though it seems like a higher price at first,
Yeah.
it could be way more valuable in the long run, right?
Yeah.
Both artistically and maybe even financially.
Exactly.
So it's about training ourselves to look past that initial price tag, whether it's about investing in a business or just making a big decision in our lives.
Exactly.
Taxes stressing you out? Don't worry, 1-800-ACCOUNTANT is here. Expert help, affordable rates. Call 1-800-ACCOUNTANT today and leave the headaches to the tax pros. Click the link below.
Buffett's urging us to really think about what we're getting back for what we put in. Whether it's money, time, effort. Is it something that's going to last? Does it have potential to grow, provide benefits over time? That's the value he's talking about. And that second quote, it makes it even clearer. He'd rather pay a decent price for a fantastic business, one with a strong moat.
A moat. Sorry for those of us not fluent in business speak.
Oh, good point. A moat in business, it means a lasting advantage that protects a company's profits from competitors, like a deep ditch around a castle to keep invaders out.
Makes sense.
So he prefers to pay a fair price for a company with that kind of staying power, great leadership, bright future, rather than trying to snag a bargain on a so-so company that's unlikely to really deliver.
That makes a lot of sense. So for everyone listening, how could you apply this to your daily life? Like maybe it's thinking about the long-term reliability of a new appliance, even if there's a cheaper, flimsier option available. Or maybe it's evaluating a job offer based on its potential for growth and how satisfied you'll be in the long run, not just on the starting salary. It's like he's encouraging us to look deeper, assess the real worth beyond the initial cost.
Exactly. It's about developing that habit of looking for genuine worth. And this focus on really understanding value is also key to how Buffett approaches risk.
Oh yeah, risk. Buffett's got some pretty powerful things to say about that. We have here, risk comes from not knowing what you're doing. Wide diversification is only required when investors do not understand what they are doing. And then there's this super vivid one. Only when the tide goes out do you discover who has been swimming naked. Whoa. Let's start with that first one. It sounds so simple, but man, it packs a punch.
It really does. He's boiling it down to a fundamental truth. Risk isn't really a built-in part of the market itself. It comes from the investor's lack of knowledge, If you truly understand the ins and outs of what you're investing in, the business model, the industry, the challenges, then the risk seems much smaller. It's when you're operating in the unknown, making decisions based on guesses or trends, that's when you get really exposed to risk.
And that ties right into his view on diversification, right?
Yeah.
Because the typical advice we always hear is diversify, diversify, diversify. But Buffett seems to be saying if you really know your stuff, that level of diversification might not be as important.
That's a big part of his philosophy. He thinks you should focus your investments in a few businesses you really get. His logic is, If you have deep knowledge and believe strongly in your choices, spreading your money across a bunch of companies you don't know as well can actually be riskier, because you can't really keep track of them all. It's important to say, this doesn't mean diversification is bad, especially if you're just starting out. It just really emphasizes how much he believes in expertise and focused investing.
And then there's that swimming naked line.
Yeah.
That's such a strong image. What's the main takeaway there?
It's a fantastic metaphor for how a good market can hide problems. When the economy is doing great and everyone's making money, even companies that aren't run well or strategies that aren't sustainable can seem like they're doing great.
Yeah.
But when the market drops, the tide goes out, then all those flaws and weaknesses are exposed, just like someone caught without any clothes. It's like he's saying it's crucial to have a solid foundation, good practices, no matter what the economy's doing.
So for everyone listening, this isn't just about stock picking. It's a wider lesson about knowing where you might have gaps in your knowledge, like any area of your life. Where could a lack of understanding create hidden risks for you? Maybe it's in some complex financial product you signed up for without really getting the details, or a new business venture where you haven't done enough research. Getting that deeper understanding is like putting on that swimsuit before the tide goes out.
Exactly. Being thorough and always learning, those are your best ways to protect yourself from unexpected risks.
Trade in your boring job for a brilliant career using Adobe Creative Cloud. Start learning now with the free trial link in the description.
Now let's move on to another key part of Buffett's success, his long-term perspective.
Yeah, the long game. We have some great quotes here. Our favorite holding period is forever. Time is the friend of the wonderful company, the enemy of the mediocre. And then this really nice one. Someone's sitting in the shade today because someone planted a tree a long time ago. This is about patience, right?
It is. Buffett, he's the ultimate long-term investor. He's not about quick wins. His plan is to buy into great businesses and let compounding do its thing for decades. That first quote, "Our favorite holding period is forever." It's not just a saying. It truly reflects how much he believes that if you've invested in a truly amazing company, one with lasting strength, there's no good reason to sell. Over time, its value is probably going to keep growing and compounding.
And that second one, about time being the friend of a great company and the downfall of a mediocre one. That's such a clear and insightful way to put it.
Yeah, it shows how differently quality and mediocrity play out over time. A strong, well-run company with a real edge, it's probably going to keep growing and doing well, getting more valuable every year. But a mediocre company struggling with problems, lacking clear direction, will likely stall or even fail. Time makes the difference between the strong and the weak even bigger.
And that tree analogy is just so simple and relatable. It's like a reminder that big achievements, the shade we enjoy in the future, they often come from things we did a long time ago, whether it's investing in your skills, your career, building relationships, or, making smart financial moves. The seeds you plant today will determine what you harvest later on.
That's it. So think about it. What trees are you planting in your life right now? What long-term investments are you making in yourself, your relationships, your future happiness? How would thinking in a longer time frame change the choices you make today? Maybe that impulse buy seems less appealing if you think about its long-term impact on your finances. Or maybe that extra effort you put into learning something new today could have big payoff in your career down the road.
It's like a push to think beyond just the immediate reward. Okay, switching gears a bit. Another fascinating part of Buffett's approach is his emphasis on emotional discipline.
Absolutely essential for succeeding over the long term in anything.
Yeah, here's some key quotes. Be fearful when others are greedy and greedy when others are fearful. And the most important quality for an investor is temperament, not intellect. Those really highlight how important psychology is in making good decisions.
They do.
That first one about being fearful when others are greedy and vice versa, that's like being a contrarian right. It's about going against the crowd.
Exactly. Buffett sees that market bubbles and crashes are often driven by mass psychology, by waves of too much optimism, greed, and panic, fear, that take over logical thinking. When everyone's buying and prices are going through the roof, it often means things are overvalued and a correction is coming. On the flip side, when the market's down and everyone's scared, that can be a good time to buy quality assets at lower prices. It takes guts and independent thinking to act differently than everyone else.
And saying that temperament is more important than intellect, that's really interesting. You'd think being a financial genius is the most important thing for investing.
But Buffett says the ability to stay calm, rational, and patient, even when the market's going crazy, is way more important. You can know everything about finance, but if you let your emotions fear, greed, panic control your actions, you'll probably make bad decisions. A steady, disciplined temperament keeps you on track with your long-term plan and helps you avoid impulsive decisions driven by short-term market noise.
Think back for a second. Can you remember a time when your emotions maybe swayed a decision you made? Not just with money, but in any part of your life. Maybe you reacted too quickly out of fear or got caught up in excitement. Buffett's wisdom here is a great reminder to be more aware of ourselves and have more control over our emotions. How could being more disciplined lead to better outcomes in the future?
It's about developing that inner peace, that ability to think clearly, even when things around you seem crazy or uncertain. Now let's shift a bit and talk about something that might not seem directly related to investing, but is super important for lasting success and happiness: reputation and integrity.
Yeah, this quote really stuck with me. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. That's a powerful reminder of how easily trust can be broken.
It is. Buffett's saying your reputation is one of your most valuable assets, both in your career and your personal life. It takes time to build through consistently doing the right thing. And it can be shattered in seconds by one bad decision or a lack of integrity. Just thinking about the long-term consequences of your actions, prioritizing protecting your reputation, will naturally lead you to make better, more ethical choices.
What do you think about that quote? I mean, we've all seen examples of people or companies whose reputations were ruined, sometimes for good. Buffett's point is that when it comes to your integrity, you always have to play the long game.
Definitely. It's about understanding that trust is hard-earned and easily lost. Now, finally, let's talk about something that really contributes to Buffett's fame and how much people like him: his simplicity and genuineness.
It's amazing, right? This guy is one of the richest people in the world, but he lives a surprisingly simple life.
It is. He still lives in the same modest house he bought years ago, known for his down-to-earth tastes. That really adds to his appeal. It's so different from the typical image of someone in high finance. A lot of people find his simplicity refreshing and admirable.
And then there's the Berkshire Hathaway annual meeting, what people call Woodstock for capitalists.
Mm-hmm.
People come from all over the world to Omaha every year just to hear him and Charlie Munger talk. It's wild.
It really shows how much respect and admiration they have. And a big part of it is how clearly and simply Buffett explains complex ideas. He avoids jargon and uses plain language, making his wisdom understandable to everyone, no matter their background. Plus, his philanthropy, how much he gives back, makes him seem like someone who cares about more than just money.
So what's the lesson we can learn from Buffett's down-to-earth style, especially considering his success? Maybe it's a reminder that true wealth goes beyond money. It's about living a life aligned with your values.
Absolutely. His authenticity and simplicity make his wisdom feel more accessible to everyone, regardless of their financial background.
So to wrap up our deep dive today, we've looked at some of Warren Buffett's most insightful quotes and what they really mean. We covered the difference between value and price, understanding risk, the power of a long-term perspective, the importance of emotional discipline, and the lasting impact of reputation and integrity.
And while Buffett's an expert in investing, we've seen how these principles can be applied way beyond the stock market. They can help us with all sorts of decisions in our lives.
Here's something to think about. Which of these ideas from Warren Buffett really speaks to you? To your life right now or your goals for the future? How could you use this wisdom in your own decision-making? These ideas might sound simple, but as we've seen, they have real lasting value that can truly impact your journey.
They really can.
Thanks for joining us for this deep dive. Until next time.
See you then.